of a sudden, where's all this demand coming from?
Well, hi again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. I am pleased to introduce the founder of Comstock Investments. We have David Kruse with us today, and we're going to do a recap of 2024 and some weird things that happened in 2024. Markets were kind of upside down. The weather was topsy-turvy. David, as you look back at the year that just ended, I wanted to get your reflections on that and if there's anything that we can glean from what we went through.
Well, Marlon, I think we recognize that it was a very bearish year. The market outlook through almost all of it was negative. And most of the reason behind that was USDA outlook and their forecasts. They were consistently looking for record yields and as well as for a great period of time, even reduced demands on their balance sheet. And so therefore they had overinflated carryovers that they were projecting throughout the entire year. The market, it believes what the USDA tells them until the USDA tells them something else. It was like putting their finger on the scale of the market the whole time on the negative side. That was much to the benefit, I guess, of some end users, but very much negative to producers who were in a lost cost of production situation that the USDA essentially made worse. We found out how far the USDA was off from the USDA when they came finally with their January crop report. But for most of the year, it was they were projecting a much more negative supply balance sheet. So we look at what their forecasts were for the year, for where they started out at for corn production, and then where they ended up at. And you can see they kept building their production estimate clear into the October report when they were finally starting to get some harvest data. Earlier in the year, where we lived here in Northwest Iowa, we experienced some, record flooding, what we thought was some tremendous damage to crops, and what we believed was a relatively material amount of the Corn Belt that the market completely ignored. When we had our 2-day 11 inches of flood here in Northwest Iowa, the market went down. Well, why did it go down? Well, it's because that the USDA was predicting this overinflated carryover situation so that the weather had less impact on it. We had some room that from where they were with their crop size that we could lose yield, and then there was, until we really didn't know how much that yield loss was, and they actually, unfortunately, it took the USDA clear to January to quantitate that. It's a little surprising as to why it would take them that long. The harvest starts pretty well underway in September, so they have that data by the October 1st, crop report. But by the November report, they've got almost all their test plots harvested, and they have almost all of the data. And yet, they didn't change in the December report much of their production number. It took them clear until January. My question is, why is that? Nothing happened really agronomically between November and January to change, to take 3.8 bushel off the national corn yield. They were basically reporting when they were able to tabulate their harvest data from their test plots. It takes them too long to do that. It's too long of a period of time between November and January to get those numbers built in, and so they should have had it in December, if even to the point where maybe they should delay the November report. And so they haven't had time to incorporate that into their production numbers so that they do so. There's a similar situation that goes back a few years where, as far as the acreage was concerned and how that was reported, the USDA would end up with one set of numbers and the FSA end up with another. And everyone couldn't figure out why the USDA wasn't using the FSA numbers because they were what was being reported by the farmers. Hard data, so to speak. Well, they would complain that, they didn't have, the computers couldn't talk to each other or something. They didn't have the software or whatever. And it took them a couple of years to get that straightened out. But there was some major discrepancies sometimes between, what USDA said the acreage would be and the FSA that they rectified. Well, I think they've got a similar problem here with their harvest data from their test plots and getting it into the WASDE report and then ultimately into the annual crop report. And so we end up with a tremendous difference for what they're projecting production to be than what it actually turned out to be. I don't know, can we put that chart back up one more time? You can see that they were still, even though we had all these agronomic problems, we had late planting, later than normal planting. We had the floods in the Northwest Corn Belt. We had drought in the Plains states, and we had drought in the extreme Eastern Corn Belt. All anyone could see was good crops in Illinois and central Iowa, and everyone just bit right into, including USDA, that the yields were going to be so fantabulous as a result of that. Well, we can see where we ended up in January. That pretty dramatic. Well, I guess it's the second largest change in history between their November report and their January report. And if you go back to where they were in October, it was even a larger change. They were really diluted at that time. Then we look at the carryover, that'd be the next chart. Started out with their biggest carryover at the beginning of the year. I guess where this one starts actually is in August. And so in August, they were still looking for well over 2 billion bushel carryover. But by January, they were down to 1.54. That is a 533 million bushel difference. And to the market, that's probably 50 cents or $1 difference. Then it's expensive to store corn. Interest is high. Farmers have moved an awful lot of their crop. By the end of 2024, maybe even some of the low prices in August based as what they were, and then on into, but they've had to go clear through harvest into the end of the year. Those farmers will not able to take advantage of reality because the USDA was giving them a misperception of what the supply-demand balance sheet actually was, while they still own the grain, and so therefore they lost out. I would say, we were getting a government payment for $43 an acre, 42, whatever it is. USDA cost us twice that much. Every farmer out here in their corn revenue because of how their process worked here. So that most farmers ended up selling a lot of their grain before we got the correct balance sheet numbers, and we're assuming they're correct at this point. There's some that believe that USDA at 1.54 is still too high. So during this period, they came down about 337 million bushels in production from their forecast in October or whatever to where it was in January. The carryover that they're projected rate was reduced by 533 million bushel. That's a 196 million difference. In other words, they underestimated demand by 196 million. If you remember back last August, demand was portrayed as being horrible. Oh, it was just terrible. Wasn't going to get any better. On and on and on. And obviously, by the end of the year, exports are running ahead. The ironic thing of that is that part of the reason for that is the tariff threats. Every one of our major customers has been aggressively in the market from August forward. They like the price, and also they were looking to build an inventory ahead of potential tariff threat. All of our major customers, Japan, Mexico, Colombia, South Korea, Philippines, all been daily reports all the time here, buying corn, as to protect themselves from that. And so not only was USDA off, 337 million bushels on their overproduction, they were off another 196 million in demand. And you start talking about this 500 million bushels, and that's essentially our ag recession right there. And it was USDA created. And they missed hog numbers just as badly, at the end of the year too. Far overstated what the hog numbers would be. So those prices stayed lower longer than they should have.
Let me ask you this then. So they had that big reduction in the January report. It doesn't seem to be beyond USDA to make ultimate revisions later on in future months and go, yeah, we need to change those a few months ago. That seems like that's been pretty habit forming over the past couple of years.
Sometimes it takes them clear until the September stocks report of the following year before they actually get the numbers right. But this time they started off, they were overestimating the trend line yield from day one, and then did not compensate accordingly for the actual agronomic conditions that occurred until they got the numbers in their harvest data, in their test plots. And then it was like, whoa, we are really far off. And then, wow, look all of a sudden, where's all this demand coming from? I mean, they ended up having to revise upward all categories: feed usage, ethanol, exports, Yeah, and so they created this hole out here for that August low a year ago that was basically on bad data, and I would argue that put the ag economy under a lot of stress at the time. We can look at soybeans, a little bit of different story there, but similar.
I was going to ask you about that. Let's take a look at their soybean forecasts that occurred through the course of the year.
This is the real end production is what it is on both sides, I guess, look at that way at the chart. So, they again were extremely optimistic to start out the year between both the acreage and their yield forecasts, so that they were, projecting very, large almost 4.6, just under that for production. That had shrunk. But we ended up at 180. We went from, on the carryover side, I think that's the next chart. On the carryover side, they started out in the year at their highest carryover, which was over 560 million bushel, and we end up at 380. And so that was essentially came from 180 million bushel reduction in production. But in this case, the reduction in production didn't cover the change in their carryover, so that they took another 43 million away on their balance sheet from demand side. We'll see. So on the corn side, they were way understated on demand, at almost 200 million bushel. On the soybean side, they ended up taking another 40 away.
And it's interesting that we did have such a decent rally in the corn and soybeans over the past couple of months. I guess that could have maybe happened a couple of months earlier.
It'd been nice to have had it 3 or 4 months earlier. I think that they actually could have had it. They should have had it just from their harvest data in the November report. And so there's a 3-month lag. One thing I will point out is in the difference here is that we are seeing the market respond correctly is that corn was gained on soybeans. We said their miss on corn was a lot bigger than what it was on soybeans. It's not unusual to see them start out at the highest carryover on soybeans and then have it trimmed as the year goes on. That usually comes as a result of improved demand. And we didn't see the demand side of that so much. It looks like most of their reduction in the carryover came from reduced production on the soybean side.
It seems like the marketing got shoved back from the 2024 crop just because of the way the market structure was. Does that make you change your outlook for your marketing plan for the old crop now?
Instead of a 2 billion bushel carryover, we're looking at 1.5, and so that's a 500,000 bushel difference from what it was last year. That does give us some room for production. I would not be surprised if we see a couple million acre increase in corn acres next year. Market's going to have to want to buy those acres. At this point, as I look at new crop on the corn market, I don't really see a lot of incentive as far as profitability goes. If you take a basis away from the new crop prices right now, 450, 460, that's about where the 450 will be about where the break even is for next year, I think. And so there's no real profit incentive there. Right now, really the corn market returned to $5 on the spot futures market, and that was basically break even on last year's production costs. It comes down to your basis to a certain extent too. In our area, we when prices were low, we had a positive 30-cent basis. Well, on the rally that we've seen since January or earlier, now seen our basis go back toward par at this point, and so we lost that extra. And so our cash market actually hasn't changed as much as one might expect from what change we've seen in futures because of the basis adjustments.
So I just wondered if farmers haven't marketed as much as they normally would have at this point.
Oh,
Does that mean we're just kind of in a compressed marketing window now where maybe the old crop sales have to be accelerated a little bit?
They have marketed a lot, at this point in time. They have a tendency to make the mistake based on what they saw the previous year. And last year, if you'd sold all of your crop in December and not carried anything into 2024, that would have been great, which we did most of that in our corn. We had 80% of ours sold, just not carrying any into 2024 because the whole year was negative for the most part. And so now they look at what you should have done last year, which they held that crop last year. Farmers were slow sellers, and they finally had to give up in August, and we had to have a market washout, before we put that bottom in. And there was a lot of transfer of ownership at that point in time, to commercials. So this year, I think that actually, margins got a little tighter, but money was in higher need, And I think there's been some aggressive sales in both corn and soybeans, probably ahead of where they were last year at this time. So now the market's performing better. The one thing that's going to change as we move next year is, as I mentioned, the market would not respond to weather so much last year. We have these events that would happen, late planning, whatever, and the market just ignored it. It went down. That's because they were projecting a 2 billion bushel plus carryover. Well, now if they're at 1.5 and something happens economically, weather-wise, I think that the market will respond this year. You will see some weather rallies that maybe you didn't have before that way as a result. And so it gives us changed dynamics, I guess, as we move ahead here into 2025. And of course, there's now one of the new dynamics too relative to tariffs and trade. I don't think anybody's got that figured out, what's going to happen now. But I think we've seen the first initial reaction to the tariff threats, and that has actually been helpful to demand. As I mentioned, front loading. All these traditional buyers have been increasing their inventories, trying to get at least on the books and maybe in their own bins in their own countries because of this tariff threat. And I would think they would maintain a higher inventory into the future because that threat's probably not going to go away. So the initial impact of the tariff threats was surprisingly positive. We'll see how the future's unpredictable. Whether he comes with some of the more draconian tariff actions that he says.
Well, if you don't mind, I'd like to continue our conversation on that side of the ledger as we roll over now into 2025. We're going to have all new rules of the game in 2025. So we'll talk about that in another episode. In the meantime, David, thanks for helping recap what we went through in 2024, helping to make sense out of it. Appreciate that a lot. We'll talk about the new crop coming up here in a future episode, so stay tuned for that. That's David Kruse with us, the founder of Comstock Investments. Thanks again for joining us. Appreciate that very much. I'm Marlin Bohling, and for our producer, Brianne Jenkins. Want to catch you next time right here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.